What's going on, everybody? Hope you're doing well. My name is Lamont. I've been a full-time trader for about 7 years now. I'm part of the Chart Guys team for about half that time, where I head up our futures room and, of course, our swing report. In this video, we're going to go over a bunch of the hype sectors that we've been covering recently, give you a little bit of an overall market update as well, and hit you, of course, with some trade zones, quick and dirty style. But as you can see, just comparing last week's setups to this week's, pretty good hit rate on them. So hopefully you got some of those trade ideas from last week. And without further ado, let's get into it. So we'll start off with NVDA. We're watching NVDA because bit of a bellwether for semis in general. We got earnings coming up next week. They would probably have to have some pretty impressive earnings. Like this is probably good earnings being priced in. So, I know that on the obviously this earnings sent us, mooning to a certain degree, and this earnings was pretty mute. This one was pretty flat as well, but now this one you've run pretty hard into. So, and I know that we ran pretty hard into this one, but at this point you ran hard into it and there was like still resistance here. This is a situation where we're running really hard into the earnings and there's not really any overhead resistance. This is kind of setting up for a bit of a rug pull, especially with the weakness that just entered SMCI. I'm a little wary of this earnings, but no predictions. We don't know what's going to happen. And so I wouldn't touch this until after this, right? The idea, though, however, is even if you do get a pretty bearish reaction, if these buyers can maintain over here where the last really notable amount of daily balance was, then bigger picture, they're actually doing fine because, of course, on the weekly time frame, we're just going to be looking for a weekly higher low with anything over 473.20 being good for one. And, of course, very similar to SMCI, you have this big weekly balance here, too. So really bigger picture, even if these sellers take out this guy over here, which is the local key area of demand, as long as the buyers can hold over all of this demand over here, bigger picture, they're actually doing fine as well. So NVDA could literally retrace 30% and really structurally in the weekly time frame be fine. Okay. So yeah, we'll see how earnings shakes out. It's anybody's guess. This was a trade zone that was shared last week. It was a hypothetical trade zone because obviously Friday closed here. So we were saying, okay, well, if you're going to look for that daily higher low, there's a bunch of demand that was built over here on the hourly time frame. Gave you a bit of a conservative trade zone using this guy as the key reference. And I know that if you did use this trade zone, you only got one fill up here. Whenever I share these data and price range boxes, I assume that fill, hypothetical fill in the middle, hypothetical fill at the end. Obviously, then that would give you your average price to be here, assuming you got all three fills. This is where I think stop is pretty reasonable, and this is where I think the target should get to. So I recognize that this trade zone, you only get this one fill, that's fine, but the risk on this zone is only 2.41%, right? So you just, like think about the position sizing on that, right? You would just, let's see here, you would just take this 0.0241, right? So you would say, let's say you want to risk $1,000 on this trade, right? So take 1,000 divided by 0.0241. All right. So on average, I mean, the position sizing can be $41,493, right? That's across three fills. So just divide that by three. If you apply $13,831 and 25 or 26 cents here, here, and here, then your average price would be here and your total capital used would be 41493. But because you only get one fill there, so you just divide that by three, you get one fill here for this size, and this fill gets to this target, right, where you can easily chop it up for 3%, 3.2% or so. So you just multiply this by, let's see, 0.032, and it's a $404 win, right? You take off half of your position there, you bank $220, you throw your stop under there. Worst case scenario, you're walking away with, more or less $200, right? So very quick and dirty explanation how you can use these trade zones if you're comfortable with that kind of an approach. It's totally up to you. It's not financial advice. I'm just here to offer you some potential trade ideas and some analysis. But if you do want to follow along with trades that me and the team do, we send out regular updates for anything that we do, then check us out. Links below for swing report. Yeah. So anyway, that's pretty much it for NVDA. So SMCI, if you recall, last week we were talking about how this is kind of setting up for an elevator down situation. And lo and behold, this is certainly an elevator ride right now. So remember what we're talking about here. This is really the key area here. SMCI, after falling 20%, could still go another 60% from here and structurally still be okay, because this is the last area of major demand that was created. You can see how bigger picture, it's been doing a pretty good job of that, you know, ever since down here, sideways higher, you break down, can't clear this, sideways higher, you get it, etc. So that's really all that we should be looking out for here. It's certainly not a good look, but I would be surprised if they were to come all the way back down into the space. What's more likely to happen is this will probably stop somewhere above here. And once it gets to flattening out, that's going to create opportunity like this again. Okay, so we shall see, like pretty much like this, right? You see this gap down situation. Okay, they should be trying to get here next, the next area of demand, right? Gap down after a big rip up, they should be trying to get here. If they can't trade through here and they start going sideways, we can use these lows from here as a bit of a guide to be bottom fishing. Okay, so that's what we should be looking out for in the short term for SMCI. But for now, I wouldn't touch this yet, especially not before NVDA earnings. Probably will have some kind of effect on this chart. Moving on to Bitcoin. So Bitcoin, if you're in from this guy, you're still just totally sitting pretty. Tons of space for a daily higher low. Anything over, if these sellers can't even come back to here, then they don't really even create any meaningful change on the daily time frame. So this daily no change level, 43872.99. If they can't get back down there, no change. And the best case scenario for these buyers would be to maintain over this guy over here, which was obviously acting as very key supply here and obviously acting as very key supply here. So the best case scenario, hold over 46979.22. But even if they were to come back all the way down to 43872.99 and not take this out, from there, that would be fine. Obviously, if you start building sideways down, then that's more problematic. If you were to get a bunch of sideways like this and then move lower and then back test that and then move lower again, okay, then that would be problematic. But for right now, we're just eyeing 46979.22. Weekly time frame, space for a higher low to be set. Anything over 38501 is going to be good for one. Okay, so that's pretty much it. Ethereum. So Ethereum, we had that potential sell zone that was up here. Last week, I know it was already in the trade zone, but last week I was saying, hey, listen, if you are interested in trying for that sell, just know that it's aggressive because the general tone has been buying. And we pretty much this breakdown just back tested this area of demand. And so if we come out of here, yes, it's true. If the sellers were going to press the issue, they should do so off of here. But like I said, I was saying it's probably better to look for a position on the right side of the V. You can just check last week's video to, you know, hear that again if you want. But the idea was, I was saying, okay, if you're going to look for that sell, it's probably better to wait for this pop above the point of control, and then if it rolls back down under the point of control at 2570.27, okay, sell that and then throw your stop over the local high and target this guy, right? That was the only way that I would have liked that sell, because the sell was kind of aggressive. Now, obviously this has already broken out, and this is a great example of why you kind of want to wait to be on the right side of the V. Even if you're giving yourself a lot of wiggle room here, like some people might use like ATR, for example, they would multiply the ATR by twice, and then subtract that from their entry, and then that would be their stop loss. If you did that, I'm pretty sure you would have been stopped out as well. So, you know, I find it better to just wait for the sellers or whatever side you're trying to be on. So if you're waiting for a sell, I find it best to, you know, initiate a position once the sellers have actually shown you they're present and taken price back down under a key level, and the vice versa. Sure, if you're looking for a buy, I find it better to let these sellers be done, the buyers step in, get back over a key level, and then initiate there. I find much more success doing that. Anyway, you can see where the price is stalling right now, the value area high of this key structure over here. This key structure, which is what held price over here, which is what held price over here, and then becomes key supply. After it turns into supply, these buyers have problems with the value area high many times, grind the value area high as well, fail at the point of control over here, and now they've tested the value area high. There's a lot of space for these buyers to set a higher low. I don't really care about this little rinky-dink one here at 2472.17. I personally feel like anything over 2266.14 will be good for a daily higher low. And if these buyers can't get back, the sellers, excuse me, can't get back down under 2391.91, then they can't negate this change from this breakout. At this point in time now, this is still a reasonable trade zone, and this is what I was saying. I'd be more interested in a buy if we were to reject from this point of control. Obviously, we did not reject from the point of control. This is still a pretty reasonable conservative zone, but if the tone continues to be very strong and buyers are interested, you know, I think moving this up to something like this is pretty reasonable. Something like this makes a lot of sense too. You look to chop it up here first, right? You don't want these sellers to get through here by too much. Something like this, and then here like that. pretty reasonable. So I'm pretty interested in Ethereum in general. I'm kind of interested in Solana as well, but outside of the scope of this, I just read about its technology. It does seem interesting, especially that, I mean, it's not technically decentralized though. Anyway, whatever. That's the outside the scope of this window. I mean, of this video. But anyway, this is a very reasonable trade zone as well. Essentially, a back test of this daily no change level. If they do hold this daily no change level, they should try to get back to the point of control. If they crack that point of control, they should try to get back here. So I like this setup for Ethereum in the near term. Moving on to CCJ. So CCJ, that sure looks like a daily bear flag. So this is a situation where it's looking like a pretty good setup for a session to session setup. So if this is going to be a daily bear flag, then what you should see next week is no acceptance over this point of control. If it's going to confirm from here, I should say. So if you get an open like here above this point of control and then you drill under it, you can sell that, throw your stop over like this high or so, and then look for an exit at 38.87. Alternatively, if you get an open under the point of control of this session here, let's say you get a ideal situation would be a gap down. If you get a gap down, incomplete gap fill, roll under the open, sell that, throw your stop over the high, and target 38.87. Okay, so basically a good session to session setup on Tuesday, assuming you get a weak open or you get a strong open that cannot hold over yesterday's point of control, that would activate this potential bear flag, essentially setting in a daily lower, basically a play for a daily lower high. And if that daily lower high is set and they can crack these two lows, they should be trying to come back here. So this one's actually very interesting. There's actually a lot of good setups looking like they'll present themselves in the near term. So CCJ, very reasonable setup to be looking for a back test of this 38.87 level. This is absolutely a key structure here. This guy was acting as, you know, key resistance here, problematic here. Once we come back into it, you reject from a just shy testing the value area low. Do that again here, grind the value area low quite a bit here. Finally crack above the point of control, rejection from the value area high, get back down under it. Obviously it's showing you it's important here. So again, that's where they should be trying to get to. This also is potentially a head and shoulders. So if you don't see follow through down to here and then you bounce over here, this is also a very reasonable area to be looking for a sell. If these buyers can't find acceptance back in here, fall back down under it. Okay, sell it over there. Throw your stop over here, chop it up here at the value area high test, chop it up here as well. If they crack this point of control, they should be trying to come here next. So very reasonable for a sell in the short term, in my opinion. Moving on to TAN. So TAN, I believe we gave a nice session to session setup. That was 5 days ago, right? 1, 2, 3, 4, 5. Yes. So last week, if you can just, you know, go back to last week's video if you are so inclined. And I was saying this is pretty reasonable for a session to session setup. If value moves lower, right, which it did on this day. So here was Monday, and then on Tuesday, value moves lower. And then I said, if value moves lower and then you get a strong open over the prior session's point of control, okay, this is a situation where you can buy a move back over the open if they don't come down to the point of control, because then that's potentially a daily higher low. So lo and behold, that is exactly how it shook out. I'm like 99% sure that's what I laid out last week. It's what I present all the time. This is one of the best setups, if not the best setup. I challenge anybody to present a better setup than this. I really don't know of one. It will make you money. This, if you understand this one setup, it has such high EV, and it's very asymmetrical. It's a very intuitive play too. But anyway, if by now I'm sure you're comfortable with, or at least are familiar with it, just watch it for yourself. You know, you will see for yourself. It will prove it to you. You know, I don't care to convince you. Whatever, you know, just watch out for it and you tell me whether or not you think that there is promise to that kind of a setup. Anyway, so this TAN is essentially still not seeing acceptance back within this prior area of supply now acting as demand. The sellers failed to touch down to the point of control. Now they're trying to hold the back test of the value area high. I stand by this trade zone. This trade zone still makes a lot of sense. Essentially, all of this price action recently has been dictated by this acting as supply and this acting as demand. And so as long as that's the case, we should expect more ping pong such as this. And so for a more conservative operator, this trade zone is still very reasonable. If you did happen to capture this daily higher low, ideally you've already chopped it up before this resistance test. Get risk free, throw your stop under there. If they follow through, they should be trying to come here next by 1.70. MSOs. So MSOs came into our trade zone. Remember, this is absolutely key for these buyers to hold over, because if they can hold over this guy from 923 to 10.5, then we should expect price action like this, and they should be trying to come up here. So this is deeper than these buyers would have preferred, but they are still clinging on to this lifeline here, which is this structure. This structure here is sitting on top of all of this. And so these two become the key. As long as they can hold over this guy, then they have, they're being positioned pretty well to see more of this. Ideally, they'll hold over this guy, but this one is also okay, right? Their best case scenario would be to hold over this, but if they can hold over this guy, then they're still in the game here. So if you did use this trade zone, then again, you should have had 2 fills here, and I always suggest that you take profits before the weekend, right? So let's say that you took a fill here, you took a fill here, your average price is here, you can chop that up. That's a 3% gain, if you were to get 1 fill here, 1 fill here, 3% gain, chop it up, throw your stop for your rest under your low. If you stop out next week, that's fine. We can still be looking, using this guy as a trade zone. So essentially, if you crack through this beyond the stop, but you don't see follow through and move back above over 9.37, we can still look for plays using this pretty much exact same trade zone, trying to come here first, and then again, trying to get all the way back up there. So that's pretty much it for MSOs. There is a lot of space to set a daily lower high under 10.64, and so these buyers would create no change without getting back over here. 9.78. All right, so that's pretty much it. Best case scenario for these buyers is acceptance over 9.37. This guy over here is super key. Okay, that's it. I think, is that weekly consolidation? That is weekly consolidation. So this trade zone is also potentially for a weekly high or low, and that is all. So moving on to our boring overall market coverage now. Is that right? Was this the SPY didn't come into the trade zone? No, I guess it didn't. So this was the trade zone that was shared last week. It's odd that I wouldn't have. Hang on a second here. Yeah, I guess it didn't come into it. So SPY was no good. Didn't come into our trade zone. It was a bit too conservative. The idea was simply that if they held this area of this area of demand, then the buyers should be fine. They should be trying to get back to where they just fell out of. Roughly, more or less, test the high. So that's what this trade zone was about. Didn't come down to it. Pretty much held this daily breakout zone. So this daily no change level is what held price so far. But this is notable because this is the first time that the sellers have actually got back to the daily no change level. If you'll notice, the last time we had daily balance was over here. Daily balance, breakout, no back test of the prior high. The next time below is over here. Daily balance, breakout, no back test of the prior high. The last time before that was over here. A little bit of daily balance, no back test of the prior high. A little bit of daily balance, no back test of the prior high, etc. So the fact that we have broken out now and tested the last area of breakout is a notable character shift, right? This is a very notable character shift. Will it follow through with more weakness in the weeks to come? No idea, but it's still worth monitoring, right? Because that's all we get. No idea what's going to happen. We can only call it for what it is right now, which always has implications, of course, on what is likely to happen next. So that's pretty much it. Daily high or low has been set here at 490.72. Key resistance is, of course, all-time high resistance, 503.50. Anything under that's going to be, technically, we already started the retracement. This is like a 5-cent break under the prior day. So space for a higher low over 490.72. And that is pretty much it. It's all about this guy here. If the sellers cannot find acceptance under 491.62, then the buyers are going to remain pretty confident. Okay. The Qs, there we go. So the Qs came into our trade zone. This was designed pretty much right off of a backtest of this guy because we know that the point of control of this structure held price here, and there was a lot of space for another higher low to be set over 416.79, and so a very reasonable place for these buyers to defend was, of course, here. And so if you did take this trade zone, then your average fill would have been here, right? You get 1 fill here, 1 fill here. Your average price would be somewhere in the middle here. You can have plenty of opportunity to chop it up before this resistance test, probably no later than the gap fill, I would say. And so you should be risk-free on any runner position, but you can see how the setting up the trade zones like this just makes sense, right? Because they have to, if these buyers are going to persist, they have to hold prior areas of demand that were established, right? So that was the idea with the Qs. If you got it, great. I don't know if anybody, no one's messaged me about this one. So, but if you did, great. And if not, that's fine too. You'll notice that the low of Friday was pretty much right at the daily no change level again. So this is super key here. As long as these sellers can't find acceptance under 429.85, then the buyers will be very comfortable. Okay. So that is pretty much it. Remember, this is also, nope, not yet, which is consolidation. Just kidding. But again, a notable shift. Breakout and then back tested the breakout area. That did not happen here. That did not happen here. Right? They just missed it there. That did not happen here. I guess that's not even much of a daily breakout. So very notable that they came back down into the daily breakout level. All right, so that's pretty much it for the Qs. The DIA also, I think, missed the trade zone. A bit too conservative. No big deal. This is a daily lower low with no follow through, so this is still the same though. Even though they didn't come back down and test it, 378.25 becomes super key. As long as these buyers can maintain over 378.25, then they're not really sweating it. Even if we're gapping down, whatever, no big deal. Weekly consolidation is underway. Anything over 371.34 is going to be good for a weekly higher low. And that is it. The IWM also came into our trade zone. Pretty nice bounce out of it. This trade zone was just based on the idea that there was a lot of space for a potential higher low to be set over 190.06. And the idea that was, as long as they hold over this daily breakout level, as long as they hold over this demand zone, then they should be trying to come to the highs of this value area high, assuming that they can break this point of control at 199.26, which they did. So there was Monday straight. They popped over it, lots making space for a higher low, came right into the trade zone. Again, only one fill, but plenty of opportunity to take profit on even that one fill. So, and this was very low risk, 2.96%. So we should have had an even bigger position than the hypothetical NVDA trade. It should be like $55,000 or so, I think. If you were to risk $1,000 on this, 1,000 on this idea divided by 0.0296. 33783. Okay, I did the math very wrong there, but either way, that would have been your position size if you, assuming you got all three fills. So you divided by 3 here, 11k on that, on this bounce, assuming you just blindly came in at this level. You saw 4% on that, right? Plenty of opportunity to chop it up. Let's say whatever, let's say 0.03. You got a bad chop, 337, right? Not bad for 3 days, 4 days worth of work, right? It's not even work, it's not bad for like a couple minutes of work to initiate it or to lay out the trade, and then a little bit of waiting. Anyway, so this remains key. This structure remains key. This 113 to 422 structure. The best case scenario from here would be for the buyers to maintain over 199.26 and find acceptance over 205.46, because finding acceptance over 205.46 would open up all of this price action, all of this key supply that's in the way before all-time highs. So that's it. Moving on to the dollar here. The dollar also came into our trade zone and then did hit the target as well. Again, I'm telling you, this is the way. Like, this is one of the easiest, most straightforward ways to set up trade zones. If the market is moving sideways higher, sideways higher, sideways higher, if it's going to continue to do that, the cheapest place to find out if they'll continue to do that is a back test of the prior area where they just broke out of. So dollar came into our trade zone, set this daily higher low here at 103.365, but having problems at the point of control of this key area acting as supply right now. No acceptance over 104.745 is a bit of a red flag. So these dollar buyers would ideally find acceptance over 104.745. Space for a daily higher low to be set over 103.365, and the asset buyers would prefer if the dollar buyers rejected here, because if the dollar buyers do fail to find acceptance over this structure, then the sellers should be trying to come all the way back down here to this key area of demand, which has been dictating price for multiple years now. Okay, now that being said, if these buyers can clear this 104.745 level, they should be trying to come here 106.335. This is the key supply that again has contained price for a couple of years now. Okay, so that's it. The VIX still pretty low. This is not a high volatility environment right now. We had that big spike, but pretty much right back down to 14. And so I would not be surprised with a spike, a more meaningful spike, a more sustained spike. But for now, still a very low volatility environment. And so we'll keep looking out for the same thing. If the market moves up with the VIX, that is a bit of a tell. For example, on Monday, the market moved higher and the VIX moved higher, was a bit of a tell that potentially there was some weakness in the short term. Here's that Monday, market moved higher, VIX moved higher with it for much of the day, and then obviously the market turned around in the later session. Actually, wait, market turn around. Yeah, it was like in the afternoon, in the like the lunch hour or whatever. So that is it. That is it. Appreciate you tuning in. Thank you for sharing some of your time and energy with me. If you made it this far and you wouldn't mind giving us a like and subscribe, that would help us out very much. If you are interested in getting this kind of analysis with specific novel trade ideas and alerts and updates for these trade ideas sent directly to your mailbox, then give the swing report a shot. Link is in the description below. Otherwise, again, I appreciate your time and your attention and energy. I guess that's what I just said, right? And I hope to see you soon. Farewell.